Gold and silver going crazy, the stock market and Bitcoin going nowhere, at the banking crisis, and the Fed announcing they might stop sucking out the money from the system. So will they start printing money again? If you feel confused right now, that's totally normal and you're not alone. And that's why I'm making this quick video to just go over the things I noticed last week in case it might help you. Let's start with gold and silver. We just want to know what's going on. Like, is it going to continue? Are we about to top? Is it going to be a local top or just a top? And then we'll cover some warnings as well. One of the reasons why that you may have heard is the debasement trade. This is just because people see governments going out of control with that. There's a global uncertainty around geopolitics and wars. So right now, there are a lot of people saying, I want to be safe, I want to be in gold. And China has been one of the countries buying like crazy. Look how parabolic this is going. This is China buying gold. Also, is it a sign to be worried? Because when you look on the left side, so this is gold right now, September 2024 to October 2025. And as you can see, this move is almost exactly the same move as what gold did before the 2008 crash in the stock market and the real estate market. So just something to keep in mind. Doesn't mean it will be exactly the same thing, but usually when you see this kind of move, it's interesting to see when was the last time this happened and what happened as well. And yeah, this is the uncertainty I was talking about. Like this is literally off the charts. Here's gold. So as you can see, gold has been going on a crazy parabolic move recently after the big consolidations from 2011 to 2020. Then they went sideways and then just started going up. Particularly this year, like you can see, usually it stays close to the blue line, which is the 50 moving average. So you can see how we are far from it right now. And so usually that acts like gravity. Eventually it pulls down to the average, but you never know when it's going to go. Also look at how many green candles in a row. Like this usually doesn't happen a lot. So I'm not saying it's going to top right now. If I didn't have gold, I would be buying a little bit and waiting for a pullback to buy more. If I had a lot of gold, I would be actually selling some to readjust my target weight for my portfolio, just to ensure I'm not seeing all the gains evaporate over the next few days or weeks if gold pulls back, because it could easily pull back. You know, right now it's around 4,400. It could easily pull back to like 3,500. When it comes to gold and silver, it's the same thing. So that's it for the drivers. For the warning, oh yeah, retail euphoria. So another thing I've noticed, and you probably saw it too on the news, people start going to the physical shops to buy gold and silver. And this is something that you usually see when we're actually at the top of a stock market, because this is when there's euphoria and everybody is just buying with all the money they have. Some people even borrow money to buy gold and silver, thinking, you know, it's going to be like easy money. I'm not saying this is the top, but this is at least likely a local top. And so just something to keep in mind. So that's it for gold and silver for the short key takeaways. Now let's talk about the stock market. As I mentioned, the stock market is right now kind of going nowhere. Here it's SPY, remove drawings. All right, so this is the SP 500. And as you can see, we had the big day down here. I'll zoom in a bit. So as you can see, this was massive. We went from being far to the blue line to actually reaching close to the blue line. And then since then, we've been within the range of that candle of the crash. So as you can see, that's why I was saying it's going nowhere, because right now there's no decisive move. It's not breaking out above or breaking down below. And so that's something that we will be watching, and I have alerts set up based on those levels. But yeah, basically right now, it looks a little bit like what happened here. You had at the end of last year, this was in December, you had a big drop. So this is a bit similar to this. It was like a few months of going nowhere. Like it was regularly going back to the same highs, but there was a lot of volatility. And then eventually it was the big crash here in April. It doesn't mean this will be a big crash as well, but it just means that, you know, the most likely scenario right now is either some sideways actions for a few months, few weeks, or a pullback to some level that would mean like the market would reset, which I think is likely to be around the previous high before the crash. So it would be around here, around 610 on SPY, or 6100 on the index, which is SPX. Another signal that's unusual is the VIX. It spiked like in 99 and 2021, while the market is close to all-time high. So here you can see this chart, the last two times this happened. So here we have a green line. Here we had a green line before the 2021 top, and here we had the green line before the 2000 top. So as you can see, it's not exactly timing the top, but it's getting pretty close after a big move to the top. Does it mean we have a few more weeks of maybe going up, or a few more months maybe before there's a big drop? Or is it just a glitch? We don't know, but it's just something, you know, worth paying attention to. Even in past bubbles, People buying the dip, it was nowhere near where it is right now. And so it's kind of scary in a way to think that most of the people buying stocks right now are not buying it with actual money they have, but they are borrowing for it. If it goes down, you can imagine how bad it's going to be. It might actually be like crypto on October 10th. You know, it was mostly leveraged traders who were liquidated, not people just owning the coins. Another thing that's kind of on the radar is that every time bad news becomes good news, which kind of became the case a few days or weeks ago, this happens usually near a top or just before a top. For example, you have bad job numbers, the stock market goes up because they think, oh, the central bank is going to cut interest rates, so that's good for stocks. And so that's kind of the idea of people think bad news is going to be good, but it ends up being really bad. And so maybe it's going to be good for a few weeks, few months while you get to the top, but then it's like big crash that can take years or decades, for you to get your money back if you lose money during the crash. And it's just another chart showing that the insiders are selling a lot. So those are people who have the opportunity to buy the stocks from their own company. And right now they are not buying, they are just selling. That's not a good sign because, when the people who are aware of the real economy and the orders coming in and the profitability and they choose not to buy in the company, that's not a good sign. I'm thinking, for example, of the NVIDIA CEO who's been selling a ton of shares since this summer. If he really believed in his company and he really believed in everything he was saying, would he be selling so many shares when they could be worth much more in the future? You decide, but to me, this seems a bit fishy. Something else that I wanted to mention quickly, gamma pinning, this is a technical term, but basically it means that every month you have an expiration date for options. And during that week, usually the stock market price doesn't move that much when there are options because it's kind of like market manipulations. They want the price to stay within a range so they don't lose big money, the big players, the hedge fund and so on. So it might explain why last week we didn't get a big decisive move, but this week we might actually get a bigger move. The corporate buybacks, this is one of the big things that has been affecting the stock market, as you may have seen in one of my previous videos. And right now they are on pause because before the companies release earning, it's like a blackout window. So for a few weeks, they cannot actually buy their stocks. And so that might actually push the stock market down because they've been one of the main contributors to the stock market since about 2012. So just something that comes up regularly every 4 months. The government shutdown, it means that the central bank, more or less, but the traders really are flying blind because they don't have the data usually they can use to gauge the economy and the strength of companies and to be able to make decisions based on this. So this is something that might be kind of scary when actually all the data comes out, and especially if it's released at once and it's surprising the market. Let's talk about Bitcoin quickly. It could either be a longer cycle than in the past, or it could be actually the start of the bear market, but we haven't realized it yet. So as you know, I mentioned before on October 10th, there was the massive crash in crypto, especially in all the altcoins. Bitcoin over a week was actually 16% and about 20K. So that's huge. It's not that big a deal for crypto. We're used to volatility, but it was still a big deal. The good thing about it, though, is that it didn't affect the whole crypto market. It could have crashed the whole market like FTX did or Luna or other things, but because it was mostly leveraged traders, the big players haven't exited. People who bought ETF haven't exited en masse. People who actually have the coin haven't sold it. So that's why, in theory, it's good because with a crash like this, you could expect Bitcoin to be much lower. And the fact that it's still holding at the current level is actually a good sign. The other thing is that people have actually done the opposite of what created the crash. Instead of piling into longs, so being bullish and betting on the market going up, now a lot of traders have been betting on the price crashing down. And so there's actually a potential for a short squeeze. So everything in yellow here shows you the level where if the Bitcoins goes up to that level, they will be liquidated. They will be forced to sell at a loss. And that will actually push the price of Bitcoin up. It's like a vicious circle for them, a good circle if you want Bitcoin to go up. But yeah, basically, we could get the reverse, like a 20,000 plus day instead of the 20,000 minus week. Another thing that is kind of pushing the bullish narrative is that right now, as you can see here, that Bitcoin is at an extreme bearish sentiment indicator, which was seen here the last time in the April crash. This was the August, September 2024 before the big move. So as you can see, usually when the sentiment reached this level, in the past, this has been a good move. But if the cycle is over and October 6th was the top, of course, this wouldn't work. And last thing, this is a technical chart, the open interest, so the number of open contracts. And as you can see, we had the biggest red day. So many contracts open, people betting with options on Bitcoin. And despite this, the price didn't move that much because when you look in the past, you had big red candles that they were much more than this, but had a bigger impact on the price. So this is just to say that it looks like the Bitcoin ecosystem has been maturing enough to be able to handle a crash like this and still stay positive in a way. Doesn't mean that the bull market will go on, but there's always the option that this time is slightly different. And I don't like saying this time is different because usually it never is. And we'll know in a few days or weeks if the bull market continues or is over. What I wanted to say is that because of all the ETF and the potential for people who have retirement accounts to go en masse buying Bitcoin through ETFs by the end of the year or early next year, it's actually possible for the market to be extended a bit past that typical 4 years because we have so many things, including the Fed. The Federal Reserve was supposed to cut rates. Well, they started cutting rates a year ago, and then they just stopped. They were on a path where they were supposed to cut, which would have really pushed Bitcoin higher. They didn't. So that could be one of the reasons why the cycle is delayed a bit, because the liquidity that was supposed to push for that one last blow-up stuff has never come. And there's that whole narrative about all the retirement account, even though it's a one-time thing, plus an ongoing thing, hasn't materialized yet. So that's why I think there might be one less push in the next few months. I don't think it's going to go past 6 months from now. I'm thinking more like, 2-3 months, potentially 6. As you can see, this was the top of the previous bull market here at about 70K. And so that's why I don't think we will go below this level if the bear market starts now, because in the past, here was the top of 2017. And as you can see, it's kind of around the area where the market dropped. It dropped a little bit lower because of FTX, but globally, if you look at this whole area was around the top here. So I think there's a good chance that the top here will be like a very good buying opportunity for most people. And so it won't go lower than this if this is actually the bear market. And this is the potential top I was talking about on October 6th, which was about around $126,000. So once Bitcoin actually breaks down, the first level, of course, is going to be the 100K because it's a very important psychological level. If Bitcoin drops below 95, I would be saying, okay, the bull market is over. But yeah, I think as long as we get some direction within the next few weeks to get a sense, otherwise, I might just keep going like this, especially if the broad market goes nowhere. Bitcoin could be going nowhere for weeks as well. Bitcoin usually has big moves. It can be doing nothing for a while, then boom, big move. So you just never know. But yeah, basically that's the situation right now for Bitcoin. Let's talk about the banking situation. I'm sure you heard the news. There were many people saying that this might be another crisis that started with some banks, and all the investors were saying like, what's going on? And the stock market dipped. So basically the idea is that a few banks said that they lost money, and JP Morgan said that when you see one cockroach, usually there are probably more. And so I think he knows that there are many more banks that have been doing bad deals that have lost a lot of money, and those are not surfaced yet. And so when they do, they might scare the market a little bit. This might be the catalyst actually that pushes the stock market and Bitcoin down over the next few weeks or months. So we'll see. What is kind of scary about this is that the way that the fraud and the loss were done is kind of both similar to 2008 with the real estate market and 2001 with the dot-com bubble bursting. Just before the dot-com bubble burst, there were a lot of shady deals done and companies were borrowing tons of money with banks just lending without asking questions. So we'll see if anything pops up in the next few weeks or months. But I'm following the banking market very closely because this might be tanking the whole stock market if something big happens like in 2008 or 2001. Very quickly about the Fed, I'm not sure if you heard, but basically Powell has done a conference recently where he said that they will probably stop QT, which is quantitative tightening or sucking out money from the monetary system. This is basically the opposite of monetary printing. So monetary printing is what they did in 2020, 2021 that pushed all assets up, the stock market, real estate, and everything else. And since 2022, they have actually done the opposite. So you can actually see it on this chart. So this is the balance sheet of the Fed. During 2020 and 21, you see it went up here. That's because they were buying a ton of bonds and mortgage and things like that just to help with the liquidity in the systems because banks were not lending to anyone. And so this was the only way that they could prevent the system from freezing. And since 2022, as you can see, they've been going down except for a blip here when there was a banking crisis in 2023, which was put under the rug for a long time because of a program they created. And so this is actually the longest time they've been doing this because you can see as every time they start to go down, they have to go back up. They went down, they had to go back up. This is something that it's going to be interesting to see how it affects the market, that they finally stop sucking out liquidity and potentially inject liquidity if the stock market needs it or the banks needs it. Definitely something worth checking out during the press conference of the FOMC on October 29th, because in addition to the cut, if they actually mention they restart money printing, this might actually push the stock market up like crazy, because this is like a keyword that people have been waiting to hear almost every meeting for the past year. People keep asking, when are you going to stop QT? When are you going to start QE? So we'll see. Next, just a few things to watch over the next few weeks. As I mentioned, I'll keep watching the banks. I'll let you know if I see anything major that pops up. Another thing that I didn't mention yet was the geopolitics. The peace conference in Budapest within the next 2 weeks, that's currently being in the process of being scheduled, could be really good or really bad depending on the outcome, and will affect a lot of stocks and sectors. Think anything related to either a peace deal or more war might affect gold, silver, oil, weapons, manufacturers, and many other things. So that's something that might actually increase the volatility that's already present. Of course, the Fed meeting I already mentioned. And the data dump, once we get the data from the government after the shutdown is resolved, which might actually happen this week. So I don't know how much time it's going to take for them to go through the data and release it. But if it's all released at once and there's a lot of scary data in there or surprising data, that might increase the volatility even more. So as you can see, we have a lot of ingredients that are kind of all together for a perfect storm of potentially the stock market going up, going down, if you have both good and bad news and the market doesn't know how to digest it. So we'll see how it goes. And lastly, things I wanted to help you out with all this, because I don't want just to leave you with so many things that are kind of scary. First, pay attention to the conflicting signals. Every time you see in the market that things are not acting the way they should be, don't panic. Just try to seek information, ideally from different sources, so you don't have just the one source like CNBC or people who might be biased a bit, pushing a narrative to defend their advertisers. Also try to seek a different perspective from people who might be disagreeing with you. If you have a process, it's even better, because then you won't be guessing, you're following clear rules. If the price goes below the blue line, I sell. If it goes above, I buy, or things like this. Rules for how much money can you put at risk and sleep well at night, so those kind of things. And stay calm and create a plan and stick to the plan. Another video that I think might help you actually is a free video I did on the 5 strategies to help you protect your portfolio, and see if one of those strategies could help you. It doesn't mean you have to go with me. I'm just presenting the strategy, and you can do it on your own or go with someone. But yeah, basically those strategies can help you out and save your portfolio potentially. So it's worth checking out. It's only 30 minutes. You can even check with the chapters, the strategy that you want to watch first. So I'll put the link in the description, and I'll put it at the end of the video as well to help you out. So if you have any questions, if you want me to go into more details into one of these topics, feel free to let me know, and I'll do my best to help you out and to navigate those crazy markets. So thank you for staying until the end, and until next time.